Hi, this is Paul from Expat Software Solutions. This is another homework from one of my apprentices. This time it's the Q2 cohort for 2024. They're only on week 5, but this is a prime example of how to start to look at the behaviour of that one instrument and the importance of just having the one instrument to trade, because over the 40 weeks of the apprenticeship, we introduce lots of strategies just to trade the one instrument, so you get continual trading opportunities. But right at the beginning, some of this work is really important, and the work continues for as long as you're trading to understand that behaviour. So week 5 is primarily on economic data, data points, and correlations. So this particular apprentice has chosen copper as his instrument. And what he has on his chart were line charts. He has the oil down at this subchart here, and also FDXS for those correlation and comparisons. Denoted the European session here, and then pre-market in the US. He has identified these inverse or positive correlations between the three on the chart. Perfect, everything's done, and then actually give me a breakdown of what he's observed. So there was no economic data during the European trading session on this particular day, so copper and oil generally correlated with each other. Copper and FDAX, which is the futures for the DAX, the German stock market index, were inversely correlated with each other. So at the beginning of the pre-market New York session, all three continued with that same behaviour during the European session, and then there was CPI economic data at 8:30 EST. Can see that there's a shift in copper and FDAX positively correlated and CL inversed. So it's important to understand and start to track this behaviour, because it sets up the behaviour and maybe the price action and volume for the rest of the day. So again, it's very important to stick to one instrument. If you're trying to trade 4 instruments, you cannot start to get all of this data together and totally intimately understand that particular instrument. What it's closely correlated to, what effects as it is. I mean, who knew? I know because I teach it, but the DAX and copper, we have some good correlations there. We've got copper's very good to trade during that London Open as well, and European Open. So next chart we have a different day, different types of correlations there with the European session, pre-market US, and then the US Open. Again, identified those on that chart because one of his chart sets is purely, and he will run this every day from now until forever, because he'll start to take note of all of these different data points when there's data and no data. We can see his notes on this one. April 11th, this one, no economic data during the European session again. That copper and oil positively correlated, and the inverse with FDAX. Pre-market New York session had PPI economic data. You see a shift where HC and FDAX positively correlated most of the session, but CL was inversed. Again, this change in behaviour with data. It will react to different data points, differently, but starting to build a picture of that behaviour. A different trading day this time. Again, highlighting those correlations for me and then giving me those notes. So May the 3rd this time, European trading session, Turkey's inflation rate, economic data. We still had copper and oil positive correlation, leaving FDAX inverse. This economic data seemingly did not affect the normal correlation behaviour. Very important to understand that. Again, that's a tick in the box really for me to understand what and what does not affect the behaviour of your instrument. 3:50 EST, yet again economic data of Turkey's export. Research showed that these major export and machinery transport equipment I think this had a positive sentiment for copper. Again, yes, copper is used a lot in these types of industries. So it is in the top, Turkey's in the top 10 countries which uses copper. Very important, doing his homework, understanding those confluences that are outside of a trading chart that could actually affect that particular data. And then you can see HG price pushing through the resistance zones with the results of that data. If we go back here, we can see there's 350 at this point here. That just gave it the momentum then to start pushing through this major confluence of resistance. And then when it comes back to test later, it is now support. So understanding what affects and how your instrument behaves, this is what I expect from my apprentices, this type of detail. So HG and FDAX has positively correlated with each other, and CL inversely correlated again. So, these things are starting to form a pattern. So New York, 10 economic data's 8:30. This included NFP, where the forecast was higher than actual, which may contribute to decline in CL and HG. Found resistance, and will need to, find that bullish sentiment to punch through that zone. We can see that HG and FDAX were positively correlated in this point, but CL was reversed. So again, let's just go back here and understand that we had lots of data at this point here. We can see copper continued to move. That top 10 country of copper consumer, Turkey, that data at that point really kept that bullish. But the US data sent oil down and FDAX down, because at that point FDAX is also very closely correlated to ES. But copper, because of the earlier move, really did continue to try and push. It gave up in the end, but didn't give up too much. It came back to test this support that was previous resistance. So understanding behavior is key to successful trading. And to the last slide, so basically conclusion by the student here, without economic data you can see that copper and oil generally correlate positively with each other. That's a good observation, but now we need to reaffirm that over the next month, 2 months, to make sure that he has that behaviour down to a T, and when that changes and why. Again, talks about economic data when CL switches places with FDAX. Another great observation here. I am training people to be successful. There is not many on my apprenticeship course. The link down below is to get in touch with Gary to have that initial interview if you are interested. This is serious stuff for serious traders. And again, this is the sort of a homework. I mean, he's only on week 5. By the time we get to week 15, week 20, week 30, there'll be more and more involved in those homeworks. But laying that groundwork right now, understanding behaviour, is very, very important. So hopefully it's not just trying to show you somebody's homework, it's actually trying to show you that he's done it well, what I expect from my apprentices, but more importantly, to show you the importance that it's not just about switching on a brokerage, switching on a chart and trading it up and down. You need to understand that behaviour, those correlations, understand those reactions to data over a period of time, so you can really understand and intimately understand the behaviour of your chosen instrument.